One of the things that people do as they get toward retirement is, for some reason, all of a sudden you become a market watcher. You're starting to look at that money go up and down. And, actually right now we're doing pretty good. This has been a pretty good year. It's been a pretty good streak that we're going through. And so you look at yourself and you say, the old saying, when is the best time to take a profit? When there is one. If you look at this stock market since 2009, we are up 1,100%.
Isn't that bananas?
It's insane.
Yeah,
it really is. Sooner or later, this is going to come to an end. But this is one of those times when you look at yourself in the mirror and you look at your financial advisor and say, is this the time to take a little bit of this money off the table, push it over toward maybe the safer ledger, as we say, and use it for retirement? So I want to find out, as people come to you right now, are they saying, Jay, help me squeeze just a little bit more out of the market? Or are they backing off and saying, you know what? This is probably a good time for me to set some of this aside. What are you hearing right now?
What's funny about these times is when everything's good like this, 23, 24, 25, everyone becomes an aggressive investor. I can take the risk. Well, yeah, it's easy to say that. I don't know if I'm going to embarrass myself here or people will identify with this. I need to lose about 20 pounds, right? And after I've just had a big, delicious meal, it's like, yeah, this will be easy. I'll just eat less. Well, I'm full. Yeah, I feel fine. Of course it's easy to say that then. Wait till you get hungry and see what you'll do. And it's a little bit like that with investing. When everything's going great, everyone's an aggressive investor. And the opposite is true as well. The most recent one I can think of is 2022. Kind of stands out like a sore thumb in the last 10 years or so, right, of the markets where we were down. I think it was 22% on the S&P. And I have to have the opposite conversation at that point. I'm a more conservative investor. No, you're really not. It's just things kind of stink right now. And that's how you feel, right? But are you trying to time the markets? Is that what this is about? Because if you're worried every day about your investments and you're worried about a 5 or 10% correction, is it because you don't have anything else allocated to something safe? And that's why every day you're kind of on edge, like what happened today? I would suggest that if you're that concerned about every move, you might want to recheck how you're actually invested. Back in 2025, late March, early April, right? That's where all the Trump tariff stuff was starting to hit the markets. There was like back-to-back 5, 6, 7% down days. And we had a client at the time, on a Thursday, he called in to the office and he's like, I want to get half out of the markets. And we tried to talk him out of it. Hey, this is geopolitical. You don't know what Trump's going to tweet next. And then the weekend came, and then the Monday, it just started all over again. And he calls in, I've got to get out the rest of the market. I want to sell everything, put everything in cash. And I talked to him and I said, hey, this could turn on a dime. I probably spent an hour talking with him, trying to walk him off the ledge, and it didn't work. So now he's fully out of the markets, right? The next day was the day the Nasdaq was up. I think it was 12%.
12%, yeah.
12%. That guy locked in a loss of several $100,000. He probably didn't get back into the markets because, I missed this, so I don't want to get back in. I'm going to wait for it to come back. And what are we up? 30, 40% since then, right? There's a guy I really like named Tom Lee. He works for a company called Fundstrat. Great analyst, great researcher, and I really enjoy listening to him. And he put out a piece the other day. He said since 1929, the markets in general have compounded about 9%. You'd average about 9%. If you missed the 10 biggest days, your return is negative. Isn't that
just
shocking?
Those 10 days.
Isn't that shocking, right?
Wow.
And how confident are you that you're going to be able to pick those 10 days? I'm not, and I'm in the industry. I've been doing it for decades. I'm not. And the final thing I'll say on this is over and over, we see retirees that they are taking so much unnecessary risk in their portfolio. You've saved $1 million, $3 million, a significant amount of money. And that hasn't just happened, right? Like you've been responsible, you've been diligent, you've invested, you've put money into your 401k and not gone on vacations or whatever it is, you've sacrificed for it. And at this point, like you've won the game. You're there. Why do you keep pushing it? Why do you keep taking on all this unnecessary risk?
It's so interesting that people want to squeeze as much out of that market as possible, but they don't need to. If Jay were to look at you and say, you can do retirement on 5%, and 5% is not a hard number to get to, but you look at him and say, I want 10, or I want to beat the market, that puts you in a territory that could really put your retirement at risk. So a lot of times when we're on this show, Jay and I will talk about people getting ready for retirement, and we'll say, okay, So say you got $1 million. And why do we do that? Because the math is easy for us, at the same time. But you might look at the radio and go, I don't have $1 million. All right, we get that. Most people don't.
Mm-hmm.
About 93% of people getting ready for retirement don't have $1 million. But here is a really interesting fact. The average retiree in the United States spends about $60,000 a year. Part of that's going to be Social Security. Part of that's going to be you. Now, if you look at somebody who's got between $1 million and $3 million, how much do you think that they spend per year in retirement? The answer is about $70,000 a year, or a little bit more than that. It's interesting. It's just not that different. That's what people spend. So, Jay, when you sit down and do that math for people and say, okay, you've got this amount, you want to spend this amount, it doesn't seem to be that much different than people who have what we would term as very good wealth.
Yeah, you hear the kind of stories that everyone's life, regardless of their wealth, and of course there's extreme poverty and extreme wealth on there, and if you kind of like knock those ends off, somebody making 100,000, do they live that differently to someone making 500,000? Okay, they've got a bigger house, maybe they drive a nicer car, but 90% of their life, it's the same thing, right? You're waking up, you're eating breakfast, you go to a restaurant, you have some lunch, you have some dinner, and there's probably some little differences here and there, but hey, what do you need for retirement income to live the retirement that you want? 90% plus of the people fall somewhere between 4,000 and 8,000. The majority of people don't have that sort of money. And guess what? There's people retiring every day and they don't have those figures, and you figure out a way to make it work.
And to know that the money that you're spending is not that different than the people who have what you might term as great wealth, that seems to be not the biggest, hardest part of retirement planning. Let's go through the process of understanding what you need for retirement and start to do that kind of math. It's retire210.com. And when you go there, you're going to see Jay's book. It says Wall Street's Game. And Jay, that book, they can actually go to the website right now. They can download a chapter, kind of get a little taste of what that's all about. But if they come in for an appointment and we start to do the math on their retirement, you're going to give them a copy. So what's the book about? It's kind of your compilation of what happens when somebody comes in and what kind of problems they're dealing with.
I really wrote this to try and help people understand what they're about to get involved in the financial machine. It's, I think, almost deliberately complex. The incentives in the industry that favor the big box companies, some of those advisors out there that are not fiduciaries, not doing the right thing, it's a real eye-opener.
Well, when you go to the doctor or the hospital, you get plugged into the healthcare system.
Right.
When you go into retirement, you're going to get plugged into the financial system. And what is built out there for your 401k and how to build income and what's out there in healthcare and all that stuff, this is a big system. It's a big monster out there. And to make sure that you don't get taken advantage of or make a wrong step, let's open your eyes to what you're dealing with. And that is in the book, Wall Street's Game. So let's get you a copy of that. Come on in and let's talk through your retirement questions. 210-985-6200 or go to the website retire210.com.